Hello world, this is H.L. Quist, and I'm revisiting you as the Mythbuster. Our topic for today is, what about our inflation Jeannie? Has she died, or did the deflation devil kidnap her? Well, the story is, of course, with the markets in turmoil and the VIX rising to surging again, is the inflation trade or the growth trade, is that over? That's what the pundits are saying. Everywhere you read and watch on CNBC, it's a deflation has reared its ugly head again. Well, certainly there's ample evidence that is, and here's the things that these pundits point to. One, of course, is what's going on in Europe. I call it the Greek tragedy. And certainly, what people really don't realize is that the German and French banks have loaned over $1 trillion to the pigs. That's Portugal, Ireland, Italy, Greece, and Spain all together. And this $1 trillion exceeds the entire capital of the French and the German banks. So if this doesn't prove to be beneficial and they get growth, man, they're in deep doo-doo. But the situation in Euroland is real. Spain's unemployment is 20%. Ireland has had a negative GDP. All the pigs are in trouble, and of course that's what the concern that is spreading around the world. But you know what the real tragedy is, the Greek tragedy, if you want to use this comparison, is that these bankers know that this play is going to fail. It's going to fail. Now, why would they do that? Well, obviously, they're buying themselves some time. What is the solution? Ultimately, and write this down. WOCU. W-O-C-U. WOCU. That's what? The world currency. They're going to wrap all of this debt up into a new currency, which will include, of course, the U.S. dollar. That's down the road a ways. Number two, Chinese checkers. We all played Chinese checkers when we were kids. At least I did. It was a simple game, easy game. And for the Chinese, the world trade was an easy game, all right? They built up massive reserves, selling products all over the world. Now they're buying assets in Australia, Latin America, Canada, strategic assets. They're also good checkers players, the Chinese, of course. But here's the real story. Is, of course, as I pointed out in my January newsletter, is that inflation, the inflation genie, is out of the bottle, and she's raising havoc. She's hit the China wall. So what is the Chinese government doing? They're cracking down to prevent inflation. They're tightening interest rates. They're tightening credit. They're upping interest rates. So it's getting a little complicated in China. They've created this massive asset bubble. The Shanghai index is off 26%, and the real estate, they say the real estate there will decline 30 to 40%. And the Chinese aren't going to sit still for that. The people are going to rise up, and the Chinese are going to have to re-inflate the economy. Number three, the U.S. market. Certainly we've seen the flash crash. We've seen stocks sell off. We've had an 80% rise in the markets in the past 14 months. We were due for a correction, but people think it's a lot more than that. And there is some sound evidence. I mean, Nouriel Roubini says that this is the bad dream and the nightmare revisited, 2008 all over again. The commodity indexes show us that gold and oil and lumber's declined 30% in the past month. There's plenty of evidence that you can point that deflation devil is taking control. Look at the VIX. The fear index, it's rising, it's going back to the days of 2008. So the question is the inflation trade or the growth trade over? That's what all these pundits are saying. Is it true? Look at gold bouncing back $16 an ounce this morning. Well, if the bears are right, and if deflation is in fact a reality, and that we're not going to have inflation, I'll tell you this. This is what the Mythbuster believes, is the game is over. And that is the world economy. The game is over because of the tremendous amount of debt. Can't service the debt. And of course that will hit him. I don't buy that. The Mythbuster doesn't believe that. But if the game is over, what's going to happen? The real estate market is going to continue. Before it recovers, it will start to collapse. The stock market will go back to its March 2009 lows. The deficits will grow larger. We're at $13 trillion on the federal debt now. Ultimately, the U.S. Treasury will default. Revenues will decrease dramatically in a deflationary environment. We've already have huge deficits. What will happen if the economy slows it more? What we're looking at, if the bears are right, if Nouriel Roubini and his group of bears are correct, what we're looking at is the big D. And that doesn't mean Dallas. That means deflation and depression. I used to call it the double D. So what has happened here is the deflation devil would capture and kidnap our inflation genie. But the Mythbuster doesn't buy this. Okay? I don't agree. And here's why. Number one, the whole world, globally, is committed to devaluation of the currency and inflation. That's what's happening. Number two is that the Euro bankers, they criticized the United States for the subprime mess, and they sold all this junk to European banks and the stimulus package and everything that's gone on here. And then they turn around and do the same thing. In other words, they're printing the money, and they've abandoned their principles and what we call their discretion and their restraint. Of course, that's what the bankers have done. The other thing is that I think that they have agreed that they're going to commoditize credit like green. They bought into the Greenspan legacy, is what I'm trying to say. Number three, a fellow by the name of Thomas Kaplan. He's 47 years old. He's an Oxford graduate. He runs a company called Tigris Financial Management. He believes that the only asset class, the only trade there is gold. Now, this is remarkable for a guy that's been pretty diversified in his asset classes over the years. He thinks it's a win-win situation whether we have deflation or inflation, because the currency, the woku, or whatever you want to call it, will come into question. All right? Number four is that Thomas Donlan, who's the editor of Barron's, read it religiously every week, cites the 1978-80 period, where we had double-digit inflation. The CPI went up 12 and 13%, 78, 79, and 80. By 1980, the treasuries were yielding 10%. Inflation was rampant. Interest rates were rising. Of course, the bonds started to crash. They called the 10% bonds in 1980 Bo Derricks. You remember Bo Derricks, the perfect 10? I can just visualize her running along the beach. What a babe. Anyway, she's kind of like the inflation genie. We have all these kind of symbolism here. But in 1981, 1982, these treasuries were yielding 15%. And what did they call them then? They called them, these bond traders always have a name for something, and they called them DC-10s. Do you remember the DC-10 that crashed in Chicago? The American Airlines, the plane rolled over on takeoff and it crashed upside down. Oh, it was a horrible thing. But they called the bond market that crashed in 1980-81 DC-10s. Well, that is a very significant point, because what he's talking about, of course, is inflation destroying the bond market. Last of all, I want to point to Gerald Swanson, again, the economist from the University of Arizona, who is an expert on Latin American economies. In the 1980s, he was in Latin America studying the inflation situation there. And what happened? Within 3 days, they went from inflation of 3 and 4% to hyperinflation. 3 days, folks. And that's what I think will happen here. If we have a deflationary cycle beginning, the bankers, the banksters I call them, are going to do everything they can to avoid the big D, and that could lead to hyperinflation. The deflation devil temporarily has captured our friend Jeannie, the inflation genie. But the banksters will bail us out. They will make sure the devil does not reappear. Well, that's kind of the picture I see for today. gold up $16 today. So that's kind of a contrarian indication that deflation is not going to take hold, although obviously it's a concern for the currency. Well, that's our program for today. I will report back to you when the situation warrants. And thank you for listening and watching, and I will talk to you again soon. Goodbye.